Hey everybody, welcome to Trading Capital's daily analysis video. Today is currently October 23rd, and as we had another market session closing in the books today, the overall market closed negative. You had the SPX down 0.017%. Now, that's not what the full story of the market told today. We actually gapped down lower today, made a low around 41.88, so we breached that critical 4200 support zone. And what I want to bring to your attention is we closed below the key daily 200 MA. We actually rallied off of the lows. Look at this crazy rally intraday, this V-shaped, boom. And now we've done a mere retrace, basically retracing almost more than 50% of this pattern. But the clear thing is that we rejected the daily 200. Now, do I expect us to bounce? I do. I'll show you a couple of reasons why. Obviously, we have some mega cap earnings, and majority of the 40% of the QQQ Nasdaq reporting earnings this week. So it's going to be pretty wild in terms of volatility, and anything can happen. Any support level can be broken. But when you hit the daily 200 and you get rejected, that's not a healthy sign. However, let's go to the larger term time frame. Look at this confluence of support. You have the weekly chart, which is what we're on right now. You just tagged the weekly 50 and the weekly 100 is right beneath it. So those two areas, and you did have a bullish cross, the 50-week crossing into the weekly 100 just a couple weeks ago, and it brought forth this big red candle. Usually when you get a bullish cross of these two major moving averages, you often see selling into it, and then we test that area of support to see if it holds. I am in the camp that that area of support is going to hold in the near term. Let's look at the NASDAQ NDQ, shall we? So if you look at the NASDAQ, the NDQ, you can pull up the QQQ. What I want to show you is you're not at any sort of moving average on the NDQ, which just shows you where the relative strength this year has been. But look at this key trend line that we just hit. Major pivot, major pivot, major pivot, major pivot. And we did have a bounce off of that key area. What I want to show you is we're actually putting in this bullish wedge pattern. This is a bull flag in the making. It's a very large one. If you take this low pivot all the way here, this would be your flagpole, and you can clearly see that there's a beautiful pattern unfolding here on the daily chart. You can even see it on the weekly chart, just allowing these weekly oscillators and moving averages to reset. Is there a chance that you could come lower? Yes, you could. If for some reason earnings were very terrible, I would anticipate this long-term trend line from COVID bottom pivot to your low pivot in June would likely be your next area of support. It would coincide with these key moving averages as well as this pivot high back in August of 2022. But I am expecting this market to actually hold the low end of this range pattern and move to the high end in the coming sessions. Whether or not we break out, that ceases to remain. But I think there's a good shot that with earnings around the corner, we could actually move up to the top of the range again and see if we can make a little bit of a higher high in the overall trend. But nothing wrong with this pattern. It is shaping up to be a potential weekly and daily bull flag breakout. Time will tell. If you look at some of the individual names that got absolutely slaughtered today, Tesla gap down again. It was down over 4%. And let me just erase some of these key trend lines here. You can see that it gapped down. It hit the low end of this range. I'm going to bring up this chart for you on the weekly chart. This is a parallel channel connecting pivot to pivot to pivot. So you have three pivot highs, fourth pivot high. You have a whole bunch of chop in and around here. This is where a bullish pattern was converging, and then it failed and broke down. You've retraced, bounced another major pivot low, and you're bouncing again. So again, will we start to move higher in Tesla? You hit the weekly 200 MA. Typically that does act as very good support, especially if you've had a measured move down into that area, which is looking likely to move higher. Now, you're going to see these lines here. This could be potentially a left shoulder. This could be potentially a head. And this could be a right shoulder in the making on the weekly chart for Tesla. Everyone is super bearish on Tesla after the earnings. Perhaps they get the Cybertruck under control, and perhaps Cybertruck orders and deliveries and sales go extremely well and could propel the stock. Or maybe they launch something new that we just haven't heard yet from Tesla. But I do think that there's a chance that this weekly inverse head and shoulders could be developing. And believe it or not, if you were to break above that neckline, even from these areas down here and move up to the top of the range around 279, 275 would be quite a substantial percentage gain. But if you were to break this inverted head and shoulders on the weekly term time frame, I mean, you have a fully measured move of just above 500, 504.94 on Tesla. That would be an astonishing move if it were to occur. Obviously on the weekly chart of the QQQ, you can also see that potentially bullish wedge pattern formation occurring. Again, Microsoft earnings will be tomorrow, so that's going to be a potentially a market moving event, being it's the second largest stock in the overall indice. One thing I want to pay attention to is the volume has been increasing quite substantially ahead of earnings, which shows that there's been a lot of distribution. One thing going for Microsoft is it has broken out of this daily trend, never actually confirmed above this key neckline. You got your original breakout reversal. This was your day one, and then you just kept on getting these little wicks closing inside of that initial green breakout daily candle. But the pattern is still healthy. Long-term trend, the weekly chart, it is okay. You're still holding above the key short-term moving average. And for Microsoft, a mega cap of this nature, to be holding above the short-term weekly moving average, despite the markets have been selling off recently, the QQQ, it is showing some relative strength. If you take a look at Microsoft Weekly, above the 7-day yellow moving average or 7-week yellow moving average, take a look at the QQQ. QQQ is below it. So a little bit of a relative strength. Perhaps there's more accumulation occurring in Microsoft in anticipation of a good earnings. If it pops, it's going to raise this market. If it drops, obviously it's going to lower this market. Let's look at the dollar and then yields and Bitcoin. Bitcoin's certainly a big winner. We closed some of our Coinbase position today, but the dollar selling off 0.5%, causing a failed inverse head and shoulders. You're likely going to come down and tap the 50-day moving average around the 105, low 105 area. That's kind of where I suspect the overall dollar. Now you are at some minor support, being the fact that you're testing the low of this wide range green bar, and you can see intraday it was defended just by a minimum degree. So short-term positive for the dollars, you are hitting this wide range green bar, but I do think it goes a little bit lower, which is why I'm a little bit more bullish in this point on the market, because I do think if yields start to show a little bit of sign of a pivot or a pause, then I think we're going to get one last hoorah rally in this market, primarily led by mega cap tech. Let's move along to Bitcoin, BTC, USDT. So Bitcoin had a big surge, and it's actually surging right now on the 10-minute chart, putting in some beautiful, nice 50 minutes of price action. Look at this resistance that Bitcoin is currently hitting. So this was the previous breakdown trend line, pivot to pivot, intersection, wide range, red bar breakdown. You're retracing now. Also happens to be pretty much a double top. So if we draw a trend line across there, you're talking about a 31,790 high, and that should be where it kind of runs out of steam in the near term. You could push up to this upsloping trend line around 32.7, but that's kind of where I'm expecting a level of major resistance to be for the overall Bitcoin price. You also happen to be coming up into these major pivot zones as well on Bitcoin, but a healthy move. If you look at some of the crypto stocks, look at Coinbase, big breakout candle, looking to confirm a daily breakout of this chart here. If it does, you have a beautiful inverse head and shoulders pattern that could, believe it or not, take you all the way up to about 91, 92 on the chart. So short term, that's a very bullish sign. We just have to watch for this potential breakout and see how the Bitcoin price action prevails. Look at gold. Gold saw a little bit of a pause day today, still very extended. I would naturally assume at least another 1 to 2 weeks of chop, and maybe even retracing to the daily 200 moving average or the upper end of this down sloping parallel channel. But healthy action in gold. The miners took a little bit of a hit today, but they did rally substantially off of the lows. If you look at oil, oil is looking to put in a potentially a rounding formation. Could be a left shoulder head, right shoulder. With the back of a war, you would expect oil to have maybe held more of its stronger price action days. But it is looking to sell off, and maybe you're going to start to see these short-term moving averages curl over, which therefore means you could see a little bit of a short trade in the energy market. And I naturally think that oil has a strong tendency to maybe retrace back down to this key zone, call it the low 70s, 72 to 73 bucks. This is a down sloping trend line, so the longer it takes to get down there, obviously the lower the target will be. Let's move along to natural gas. So natural gas has been wild price action. It's been getting clobbered. You're back below this key trend breakout. I still think nat gas goes a little bit lower. I'm being patient to potentially pick up nat gas right along this key trend line. You have two levels that I'm watching. So basically, if you were to get a retrace to the confluence of these two trend lines, I would pick it up. But if natural gas consolidates bearishly above this area for many more days, then I'm not going to like this initial level. I would wait for the actual level to be a pierce of the $3 mark and right, probably down to about 285, 286 on the overall chart. But right now I'm leaning more bullish in the overall tech space. If you look at the yields, the 10-year yield saw a pretty big dip today, closing basically right on the short-term 7-day moving average. So that is starting to pull back a little bit. Obviously, the long-term trend, you're still above this key resistance, which means that the cost of capital is extremely high for the historical time period that many stocks have been trading in. If you look at the US 2-year yield, which mimics the Fed rate, so if you pull up this chart, you can see the 2-year yield is now almost trading at that 5% level. And what's interesting is yields have been falling, and what sector has been getting clobbered? XLF. Take a look at that rejection, head and shoulders, looking to hit target 1. Financials have been certainly weighing down the small caps, and the price action in financials is nothing short of nasty. Look at that huge decline. You can pull up a variety of names, and maybe financials will get a little bit of a bounce. Some of them obviously have reported, many of them have reported earnings, so at least that kind of wild volatility is underway. But you have to watch yields closely, because maybe there's another risk in the banking institution that could unfold in the coming weeks. Certainly with rates tagging that upper end and piercing those resistance levels have put a lot of pressure on their net interest margins and a variety of their asset-backed debt-based securities. So needless to say, lots of things have certainly transpired in this market. The big one on deck tomorrow, watch for Microsoft tomorrow. I do believe we have Crocs after the bell, which I'll just pull up their chart to see what they did. Let me just go to the extended hours. So Crocs really hasn't done much as of right now on my term time frame, but they should be reporting at some point today. On that note, thank you all for tuning in. Please give this video a big like down below, and we will see you on the charts tomorrow. Oh yeah, and one more thing, Enphase is another one that reports tomorrow. So, or no, in the coming days, on Thursday. This is going to be an interesting thing because it's been absolutely slaughtered. You even had that big sympathy gap down on Friday, and now it's just continuing to bleed lower, heavy volume. I've seen this play out before where stocks gap down ahead of earnings, and then just right before they come out with a strong stellar report, and they gap it right back up. So time will tell. I mean, I like this. I like starting to accumulate stocks down here. You're well below the weekly 200 MA. You know, on the weekly chart, you're extremely oversold on the RSI. On the daily chart, you're also oversold in the RSI, except you are making a divergence. Here's your low, here's your high. You've actually made a much lower price in the price action, but you're making a little bit of a higher high in the overall daily RSI. So short-term divergence, we'll see if earnings gives us a pop to secure some profits. Take care, everybody. We'll see you in a bit later.